Hello everyone, my name is Johannes Schweifer. I'm CEO and founder of CoreLedger. And today I'm going to talk about unlocking opportunities with real estate tokenization. Actually, we are a technology company, but this topic is very little about technology. It's mostly about business. So to the agenda, I give you a short explanation what we do and how we help our clients and a couple of examples. Then give an outlook to the real estate market and what we want to achieve with tokenization, which is the same as fractionalization. Of course, always caveats in the whole thing. So tokenization is not so easy as it looks, and how you can beat the competition if you plan such a project. Of course, starting is not easy. Therefore, a couple of ideas how to get started, and finally, how CoreLedger can help you succeed. We have planned a Q&A session. If you have any questions, please write them in the chat. They will be answered in the scope of the webinar. If you have any questions later, just write us through LinkedIn, and we're happy to answer them as well. So, apologies. So now you should be able to see my screen. So what CoreLedger does is we provide an enterprise blockchain platform for companies to build their own blockchain idea, their own blockchain software. And the companies that come to us, they normally want to either extend their business, offer their products and services cheaper, or make completely new products, make them globally available. And it's all about actually digital data and digital values that can be protected and monetized through blockchain technology. CoreLedger has worked a lot with real-world asset companies, such as we created the first revenue share token in Switzerland, the Finca token that was tokenized cattle ranch, or circular economy projects, real estate, a couple of them, also micro-saving applications such as the Tuki app by Swick. We work with big German companies and companies of different sizes. BlockSense, they do the Swiss digital battery passport, or Natural Gem is tokenized gemstones. The technology that we are using is basically down to earth, so nothing unusual or pretty rare. Blockchains that are supported by our technology are all Ethereum-based blockchains, so EVM-based ones. We run on Ethereum mainnet. There's SparkNet, a separate private network that is supported. We developed our internet computer integration over the course of the last couple of years. So internet computer is also supported now, and Polygon as an EVM blockchain as well. Now, let's talk about the real estate market, because the real estate market is really huge. I mean, this is a market that is, I think, the oldest market, basically. People have always invested in real estate, and the market size is estimated by various entities to be about $380 trillion globally. Give or take a couple of trillions, I think that doesn't make a big difference. Importantly, only 75% of this, also approximately, and here percent more or less doesn't make a big difference. The market is dominated by by usage by the owners. In other words, this would not be accessible to tokenization at all, because people would not want to sell away part of their property, for example, a factory, because they need it, and sell and lease back is a potential, but not really applicable. So from this huge market, 25% are accessible. Something else that is most often left out is infrastructure and utilities, roads, bridges, railways, airports, power lines, water systems, etc. I mean, the amount is less than the amount that is potentially tokenized in terms of commercial or housing real estate, but nonetheless still in the size of a couple of trillion under management. Also, natural resources such as forests, undeveloped land, not yet zoned for real estate. That is an interesting object to be purchased or actually tokenized at a later stage. Not to be forgotten, also the digital realm, simply because the metaverse, it has been a big topic in the last couple of years, but it has not gone away, and it's just growing. So the metaverse was valued at 17.7 billion in 2022, but the projections are pretty good. So sooner or later, we should also see this being valued in the trillions. Big difference here, it's not a real world asset, but it's still real estate, and the topic is real estate tokenization. Therefore, I decided to include it, at least to have a number in there. Now, let's zoom into the reasons why, as a business owner, you want to tokenize. There are three good reasons why you would want to do that. First, you want to raise funds in order to acquire an object or build it at all. This is, I must say, one of the hardest ways to raise the capital through tokenization, but nonetheless, reason is you lack the funds, and the opportunity would be to raise the funds more cheaply at a better rate than lend money from a bank. The second good reason would be that you already have an object, but you want to monetize it, you want to sell it, and fractionalized selling could be an easier way to find investors than finding the one single big investor that buys the entire object. And the third good reason is that you have that object, you don't want to sell it, but you would want to monetize it in a way that you let other people participate in it, like revenue share, or let them use it, or something similar. Now, why would people want to buy just a fraction and not the entire thing? The most obvious reason is because they just can't afford the entire object. And of course, they could just lend the money from the bank, but that's risky. More riskier definitely than just using the money that they have already in order to invest that without taking a loan or a mortgage. Now, the second reason why fractionalization is interesting, because you simply cannot own the object because it's utility or some infrastructure object that you cannot own without a license, or it's a foreign country. Buying property in a foreign country is really difficult. So that is definitely something you should keep in mind. And maybe the one or the other regulatory hurdle that prevents you from purchasing the object. Buying a token would be the easier way to obtain at least a part stake in the object. Now, the third reason is you might not even want to own the object. From my own network, I know a couple of people who own real estate, and they say it's actually a horror to maintain it, to have all these administrative overhead that you need to take care of, etc. So just being a part owner, having somebody else taking care of everything is definitely the better choice. So these are the three important reasons. What do investors want? What are they looking for when they want to invest in real estate? Let's say the oldest reason is that real estate is pretty stable. Of course, it could be consumed by fire or destroyed by an earthquake, but that's what insurance is for. But basically, since it's not linked to the stock market, or the linkage is actually not that big, it is a little bit like gold. The term concrete gold is also a pretty old one, and as I said, price volatility is much lower. So stability is one of the most important, the most dominant reasons. The second one is saving. Maybe you remember that from childhood, or you have children who have saving plans. There are many state incentives actually for saving in future property, and banks, governments, they really give people an incentive to just start such a saving plan. So saving in gold instead of something that is volatile, and where the value could go to zero, is one of those important elements and one important motivations to look to real estate. And the third one is having passive income. So if you can constantly get some money from rent or some other form of monetization of some property, that is definitely a big benefit. Of course, differences, you could get it once a month or once a quarter, once a year, preferred. Of course, the more frequent the more preferred. Unfortunately, tokenization is not the only concept that allows to have fractionalized ownership or a fractionalized stake in real estate. There is competition. They already solved that problem. You might know real estate investment trusts. It's an easy option or easy possibility to just buy fractional real estate. It's bought like shares. It has exposure to the stock market, so that's not really beneficial. The trust itself owns and manages a portfolio, and benefit is it's a portfolio, so there are many different assets within this portfolio. And normally, if it's publicly traded, it's highly liquid, and liquidity is always a big issue. Real estate funds are the second alternative. It's a pooled fund managed by professionals. Of course, we always assume that those who manage those vehicles are professionals, right? And the fund buys and manages those properties. As an investor, you don't have to care about it. Crowdfunding platforms, third option. There are many already. They are much older than tokenization. You can invest in real estate objects through them, and also small amounts. Whereas with real estate investment trust or real estate funds, the amounts are normally larger. Otherwise, the overhead is too big. Syndicates and partnerships is something that is kind of rare. If you cannot afford an object yourself, you could team up with 2, 3, 5, 10 others and buy that object together. Big problem here is the capital is locked for quite a long time. The last option, mortgage-backed securities, so it's bonds backed by a pool of real estate mortgages, and you earn on interest. And that's three valid options how to invest fractionalized in real estate, even without tokenization. Now, it's all about tokenization. And before I dive a little bit deeper into how to solve the challenges, I first talk about the challenges. So there are many companies, many individuals looking into this kind of blockchain project. Why? Because it's promising. The market value is just big. So it's definitely promising, let's say, a big benefit to those who can bring such a project live in a profitable way. Nonetheless, there are hurdles. So one of the hurdles is the classic product market fit problem. When you look closer at investor types, there are two fundamentally different investors. One is the classic crypto investor. These are the people, mostly the younger generation, who are crypto savvy, have no problem with technology. They love gambling. They accept a huge risk, like even losing their entire stake, but they, of course, welcome the possibility to also make like a 10,000% gain in a certain investment. They like trading. Volatility is never an issue, so stability of real estate is not really attractive to them. However, KYC AML, which is the abbreviation of Know Your Customer and anti-money laundering, that is what is normally required before you can onboard an investor. That is a hurdle. Most of those crypto investors really hate that. And most of those that I met personally definitely don't like that. Opposite is the traditional investor. He has absolutely no problem with a paper product, has been used to invest in paper products for years or even decades. He's skeptical about crypto. Now, there's a bad reputation of crypto. Of course, he's reluctant to lose anything or risk or gamble. And beneficial side, KYC AML is definitely not a problem. He has nothing to hide. Now, the type of assets those guys invest in are also kind of self-explanatory. The crypto investor loves to speculate with crypto meme coins, stuff that is not backed by anything and has a huge risk and huge volatility, whereas he wouldn't like to invest in a real-world asset token, such as tokenized property, because it's boring for them. So this big group of investors is most likely not inclined to invest in real estate tokenization unless there is a certain incentive for them. I come to that later. So the traditional investor, opposite to the crypto investor, he doesn't like crypto or meme coin. That's a good part, right? The disadvantage is it's also difficult to sell him a real world asset token because he's not familiar with tokens as something that holds a value. There is another challenge, and the challenge is the definition and scope of a token. Many people I've met who wanted to start a real estate tokenization project thought that just holding a token means ownership of that property. Unfortunately, that doesn't work. So most countries do not recognize ownership of a token as being the real owner of the property. Being a real owner of the property means you need to be a party in the land registry. Normally, it's not foreseen that you can have like hundreds or even thousands of property owners or part owners in the land registry. There's space for 3, 4, 5, 6, 7. And the space is already going to be scarce unless it's digital. But anyway, there is no process for like splitting up a property into hundreds or thousands of pieces and have a proper entry in the land registry. I say most countries, because there are some countries that accept this already, or have a digital way to solve the problem. There is another challenge. So first of all, the solution. How do you hold a token that comes with some form of ownership? The solution is special purpose vehicle. That's normally just a company that is founded and has only one purpose, to own the property, and tokenization of shares is already possible. So the token holders are actually shareholders and the token represents a share. That works. That is nice and fine. Difficulty if you want to add another object. Normally, this SPV isn't sufficient any longer. It becomes a fund. And then you need another solution. Also, taxes are not your friends. I mean, nobody's friends. Maybe we can cut this out. So tokenization will normally lead to a financial product. As I said before, a single object, that would be a security token, multiple objects fund. Ownership acknowledged in land registry requires this vehicle, but keep in mind this adds to cost. Now, it incurs also taxes when buying and selling. In most jurisdictions, when you liquidate the position before 1 year has passed, you also pay taxes on top. Switzerland is a nice exception here. You can just trade real estate tokens and anyway, also shares without incurring any additional tax. Also keep in mind, if there are some utility values vested in the token, then most often, if that utility comes with VAT, of course you have to pay VAT on top. So if trading takes place, that could become a problem if people have repetitively to pay the VAT on top. Putting everything in a nutshell, so keep an eye on real-world investors who are not familiar with tokens. It's just a new medium for them. People are warming up to tokens, but it's still new, and normally it takes a decade until new technology has finally got a foothold in real-life processes, especially when it comes to such sensitive topics as money. So this is not to be neglected. Token investors, so classic crypto investors, they don't want real-world assets simply because they're boring. And tokens are not really user-friendly. Of course, for a crypto native, tokens are the most user-friendly thing there is. But think about somebody who is already 60 years and, well, I will soon also approach this age, right? But the point is, if those people have to handle new technology and have to worry about the ownership and the values vested in them, they are not really happy with the tools they have right now. So here, user experience and the UI, finally, they're really the most important elements of an entire project. Then you have, of course, to take into account that you have to cope with existing laws. The difficulty with tokenization is it's not just the real world asset laws that need to be taken into account. They exist since centuries actually, but also additional token regulation that just comes on top because that is now the new element which is used to pack the real world assets. And there should always be a plan B when a private key is lost. So most people never think about this. What happens if somebody just loses his private key? Are the tokens and is the ownership of the part, the real estate fragments then also lost? Is it possible to replace the private key? Is it possible to replace the token? That is something that needs to be answered. Of course, we have an answer to that, but nonetheless, it's something that needs to be on your mind. What if somebody steals the tokens? Does it then also have ownership of the value the tokens were meant to represent? Does he own the real estate ownership rights, usage rights? These are questions that need to be answered. Also, using decentralized technology, DeFi, so to speak, for something that is essentially centralized. It's just something investors might want an answer for. And also bridging the gap between something that is entirely digital and the physical world, this is always an issue, such as using a token to grant somebody usage rights, entry into a building. That means you need some kind of scanner or something that scans or that presents, a screen that presents QR code, right? Somebody scanning it and proving that okay, I'm the guy who has the token, I'm eligible to enter and so forth. Just something that is also not to be forgotten here. And you're always challenged by traditional financial institutions because, well, you're a competition to them. So now that was the bad news. How can you beat the competition? Of course, there are many ways. One is fees. Since such projects are startup projects, they operate with fewer overheads, fewer traditional overheads, and normally you can operate on a global scale. You're not limited to any specific country, okay, unless you have only a license for this country, right? And because it's already highly digital, many processes can be automated on top. That also applies to transparency. You're already digital, so it can be easily automated. The minimum investment amount with most of those vehicles I have mentioned before, there is a certain minimum amount, several thousands, and also management fees, etc. Here it can be cheaper, and here you can also allow minimum amounts to be pretty low. Effectively, there is no minimum, no limit actually, no lower limit. Okay, the technical fragmentation limit is the limit, but apart from that, it would allow even for micro investments. Then the entry point, as I said, you can reach a global audience more easily than others, and it doesn't really need any special qualifications. It always depends on the token, right? But especially if you create a token that has more utility properties than security properties, then investors also don't need to be qualified investors. Liquidity is a very hot topic. If done properly, then with tokens you could tap into liquidity pools or other services of market makers, etc., that allows you to grant people or provide your investors with an opportunity to sell back the tokens if they want to just liquidate their position. That has a big value. If you can avoid security tokens, then you can even list your tokens on exchanges. That is a big benefit. Once you're listed, you made it. The transparency I already mentioned, since the whole process is already digital, you can also add more digital processes to it, such as adding documents, proving the authenticity on blockchain, making audits simpler, also here fee structure. And if you simplify things, if you digitize things, then you can be cheaper than others. I think the biggest benefit actually, and that is also the benefit that we provide, is thinking outside of the box. So giving some added value, just apart from having a clever and lower fee structure, that's the possibility to allow for tokenization of utilization rights, such as well, using a property to like a vacation home, right? Using this property for a couple of days per year, you don't need to own the entire object if you just need it for a couple of days. The token would represent that utilization right, once a year, twice a year, whatever. You could create staking models, and here only the imagination is the limit, right? So there's of course a possibility to add additional incentives on top, give rewards. And the biggest strength lies in the fact that you can combine your own token model with other token projects, such as carbon credits. Just imagine an object that doesn't need to be built because it already exists, it's just shared, but has a benefit and is definitely eligible to some carbon credits that are saved by not building anything. This can be utilized. Same with circular economy approaches, or of course micro-saving platforms such as the Tuki app that I mentioned before. So opportunities and options are there, and they just need to be evaluated. Now, what you could, of course, do is you can sell your expertise. Everybody starts with a certain bag of advantages and assets in that sense. If your asset is the expertise to buy low and sell high, excellent, then you could give your investors the opportunity to participate in that business that you're making. Your advantage is, well, you raise the money at a lower rate than if you have to lend it from the bank. The advantage of the investor, as I said before, they participate in your skills essentially. The alternative is to participate in a running enterprise, like getting continuously some rent, or having the possibility to use that property. A vacation home, I think, is a very nice example. So instead of buying the entire thing here, just buy part of it. Actually, buy a token which represents part usage rights, such as once a year you get a payout in the form of a couple of tokens. The tokens represent the number of days you can use it. You spend the tokens when you actually book the vacation home. Normal revenue share from an operation such as a farm or a ranch, or because also an orchard is real estate. So that would be the classic usufructus concept where you can participate in real product that comes out of the investment, the farm or the plantation. Good deal for the investor because he doesn't need to, as the saying goes, the entire cow if he needs only a sip of milk. Right? So that is a very good possibility to use tokenization to implement this. And as I said, thinking outside of the box is one of the biggest advantages that you can bring to fruition by using blockchain technology and tokenization, such as tax advantages, swapping from one asset into another one, or using the possibility to get foreign currency dominated products, kind of swapping into something that is stable. Or you could use it to address a hybrid audience. So saving plans is very important. I mentioned before this is one of the biggest incentives why people invest in real estate altogether. So providing an opportunity to do this easily with an app, right? That is something that's definitely a good way to use the technology. Good. Now, how to get started? That's always the biggest issue. You have a good idea, and normally people are looking for somebody who just develops the software for them. To be frank, that is not where you should start, because before developing a software product, you should look into the details and all the constraints and challenges and get them solved first. Try out if your product is really actually worth to be built, or if you overlooked something. Now, effectively, it's all about sales and marketing. So you have certain assets, and you have many of them, most likely, even though you are not aware of them, such as your skills with acquiring and liquidating properties, or building them, or having a huge network, or having access to people who have that network, and so forth and so forth. All this needs to be put on the table. Then you define a product which is also interesting for the market. The build process starts only when the product is defined and clear. You wrap it nicely, that's marketing, so there's no way around marketing, but this needs to be factored in and planned already at the stage when you're in the ideation phase. And everything else later is just about basically selling. It is recursive, so with every next move you learn something, and you need to factor this in for improving your product or improving your go-to-market strategy. Now, how does this look like in the image of this ravine here? So basically, having an idea should trigger you to immediately look for somebody who develops the idea. What you need first is regulatory advice. You need to be sure that you can offer it, and you need to be sure that you picked the right jurisdiction. There are many companies who create actually the special purpose vehicle in Switzerland, especially because Switzerland has some benefits. And you have to take care that you create the right product market fit. Product market fit is the one that is the most essential. I mean, whatever product you can come up with, you need to sell it ultimately. So there must be a benefit for the investor. It doesn't help if it's nice for you, if you sell a token, it must be also nice and beneficial for the customer, for the one that is supposed to become your investor. So what you need as a first step and the first stepping stone is expertise. And once there is clarity, what you need, what you want to do, how you want to do it, and that it's legal, that the product market fit is nice. You already got the response on the basis of some screen drawings or even click demos. Then you start with the real software development. How can we assist you in this process? So first of all, we cover the entire scope. It's a 360 degrees service, starting from providing you with all the expertise that is necessary. We don't necessarily do everything ourselves. For example, since we are a technology company, we don't do any legal advice. So for this, we have partners. You can also choose your own. The first step, anyway, is giving you a quick overview what can be done and sharing our expertise with you in various industries. So this is token concept and tokenomics, something that is specific for the blockchain technology used, so that you can also use this as supporting arguments for your investors or your target audience. Having a clickable prototype helps a lot because it's much cheaper than developing the entire software, and you can still show how the product will look like. And having an idea how long the entire project will take and a roadmap. All this would be needed anyway for a white paper, and most token projects need a white paper. Therefore, this launch package, which gives you all the foundations for that, depending on the scope we define, is definitely one of the most important elements to start with. The next one is then the discovery phase. Here we do everything about technical infrastructure, design, what is needed, and what is best for your project. Provide integration solutions and recommendations how and what services are needed, such as the aforementioned KYC, AML services. You need this in order to streamline the onboarding process, or also payment services, which are elemental, and they also differ from country to country. Having everything on a plan is the most important thing before you launch and start doing anything. So having the product specifications tailored is an absolute no-brainer. And yeah, designing product. So development, of course, we support you with this. As I said, we are a technology company, so we do development for you. This starts with creating a prototype if needed, or right away the minimum viable product. Then also integrating the first client feedback, user acceptance testing, and doing a cyclic improvement of the product until the first version is ready for release. And it doesn't end there, because normally software needs to be taken care of. There is actually no software in existence that I know of that doesn't need any form of support, because continuous changes, you will also have new features in mind. You should never ever build the entire project scope as a first go. Therefore, the MVP, the minimum viable product, is the thing to go with. So number 4, support and maintenance means we help you continuously to improve the product and also keep it up and running, react to incidents, and so forth. How does it look like in the launch package? As I said, what we do here is provide you with validation of the idea and also some legitimization, because some investors, even if, especially when they are traditional investors, they want to know why they should buy a token. And we can give you these answers that you can give later to your future audience, future investors. Also guidance for blockchain infrastructure, which blockchain to pick. And then, of course, also which technical solution is needed in order to achieve the results. And there are many typical questions that always come up from stakeholders, investors. We help you to answer them. So that's first guidance with everything blockchain specific. And then, of course, also a breakdown of features so that you are also aware yourself what exactly needs to be done, how long your feature list will be in order to potentially truncate the list and say, this is MVP and this is the final product. This is important because everybody has a limited budget, even if it's in the millions, which is not, I don't want to say that projects cost millions, but they could, right? So the last step is creating wireframes and a first and preliminary design, which is available as a clickable prototype so that you can navigate through, try out your product, try out your idea, validate it, and get valuable feedback from your investors. Second comes the discovery. Here's everything about design, getting additional input, getting more details, such as also writing the white paper if need be, having more details about the product specifications, fleshing out the features, adding stories, and so forth. So this is the basis from where we start before implementation. When it comes to implementation, it's very important to say that CoreLedger developed a white label suite of products which can be used as a starting software to build on top. That helps save a lot of time and also a lot of money. So we have built on different blockchains. So Ethereum mainnet, as I mentioned before, SparkNet, private blockchain. We have Internet Computer available and Polygon, and we can also integrate others. There's the Theos API, which is often used for completely custom projects. That already helps save a lot of money because we developed a huge infrastructure with many features that can be used just easily through the API, such as token creation, token transfers to various parties using our secondary market, and many other things, so KYC tools, etc. So we have hundreds of functions there. The white label management tool is used for token lifecycle management. It's very convenient for administration. We have a template for apps. So it's not just a wallet. Of course, it can be used as a wallet, but here we also integrated POS functions. We have possibility to prove the authenticity of to prove ownership of tokens. This can be used for a door scanner, for example, to open a door if the token gives you the right to use an object, and many other things. Secondary market is integrated, and we have a white label portal that can be used for a token sale. Development phase is based on agile methodology, so it's basically either starting from the white label tools that I mentioned before, or starting from the Theos API, and then continuously build feature after feature until the product is complete. And finally, support. Here we distinguish between maintenance and support of everything platform related, and then everything that needs additional development on top, such as backend, front-end development, or mobile development or improvement. Also keep in mind, the most convenient user interface for end users is an app. However, apps always change or have to change because frameworks change, the app stores, Google and Apple, they always publish new rules and you have to adapt this. So maintaining only a part of it, because the rest, the big part, is maintained by us because it's the template, is definitely contributing a lot to the savings when it comes to support. And that's pretty much it. I hope you enjoyed it, and I'm looking forward to your questions. I hope there are some questions. You can follow us on LinkedIn, of course, if you want to book a free call with us. Feel free. So here's the link, and let's now see. Okay, first question from your experience: what do people mostly do? Tokenize the real estate or the economic rights? Rent from real estate. From our experience, well, most people see the bigger benefit to tokenize the ownership rights, because this is the most, let's say, the first thing that comes to mind when tokenizing real estate. However, as I said, the first token project we did was not the ownership, but a revenue share. So I'm divided in my opinion. Actually, it's a mixture. There is no clear answer to this. It depends on what objects you have and whether or not you want to sell them. Okay, second question. How do they structure the tokenization projects? Where do they place SPVs? I think I already answered the question before. SPVs are often placed in Switzerland as a jurisdiction, simply because there are certain tax benefits. Well, while there are benefits, there are also disadvantages. If you want to tokenize Swiss real estate, there is, for example, Lex Collar. And I should just say that we are not doing legal advice, but of course we have a lot of experience now. So Lex Collar prevents foreigners from investing in Swiss real estate. So you have to be cautious. It changes a lot. It's very dynamic, especially now with the new administration in the US. The US has interestingly become more favorable for token projects than other parts of the world, whereas before this administration, it was so entirely hostile that everybody in Switzerland said, "Oh, we don't want to have any US investors on our cap table." So it is different, and it's definitely subject to change. What is true for now might not be true in the next, okay, not month, but in the next couple of years. Yep. And third question, why avoiding security tokens is important for real estate tokens? Well, that is an important question, actually. I mean, a security token has a couple of disadvantages. One is listing on exchanges. If you cannot list the token on an exchange, then it is just much more difficult to tap into liquidity. Utility tokens can freely be listed. You might still have to argue with the exchange providers whether or not they see it the same way, but if you have a legal opinion that covers that, it should be fine. Also, your treatment by the app stores. App stores are normally super reluctant to allow an app that is selling security tokens on their stores without you providing the proper qualifications and certifications and licenses. So you will also have a much easier time with them if it's a utility token. These are just two examples. There are many more. All right. Are there any more questions? No. So thank you very much. And as I said, you can always book a free call with us. And we are happy to answer any additional questions on LinkedIn, of course. So therefore, please follow us on LinkedIn. And we're happy to help you with your project. Thanks. Thanks a lot.